Hello and welcome to Dinar Master Hub. Ever looked at a 25,000 Iraqi dinar note and been baffled to find it's only worth a handful of US dollars? You're not alone. This single fact has sparked countless debates, wild theories, and a lot of confusion online. Some people whisper about secret plots and once-in-a-lifetime investment opportunities, while others dismiss it entirely. But what's the real story? The truth is, it's neither a scam nor a get-rich-quick scheme. What we're seeing is simply the reality of Iraq's currency in today's global economy. To really get it, we need to look at Iraq's turbulent economic history, its political challenges, and how currency exchange works on a global scale. Stick around, and we'll break down why the Iraqi dinar's value is what it is, what this means for everyday Iraqis, and what you absolutely need to know if you're even thinking about touching this currency. Right now, 25,000 Iraqi dinars converts to roughly 19 US dollars. That might be a shock, but it's the accurate international market rate. Many people see the big number 25,000 and assume it holds immense value. But the conversion tells a different story. This gap is where a lot of the confusion comes from. The most important thing to understand is that exchange rates aren't random. They are a direct reflection of a country's economic health and political stability. In Iraq's case, decades of war, economic sanctions, and political instability have deeply impacted its currency's value. Whether you're an investor, a traveler, or just curious about global finance, knowing the real exchange rate and the reasons behind it is crucial. Let's rewind the clock. Back in the 1980s, before the wars and sanctions, one Iraqi dinar was worth over 3 US dollars. Iraq's oil wealth and a stable economy made its currency strong. Then, everything changed. The Gulf War in 1991, followed by years of tough economic sanctions, did even more damage. These sanctions crippled oil exports, cut off trade, and isolated Iraq from the global economy. By the 2003 invasion, Iraq's financial system had collapsed, leading to the introduction of a new currency, the dinar we know today. While this new dinar helped stabilize day-to-day transactions, the economic damage was already done, and it was reflected in the currency's low international value. So what actually determines a currency's value? Countries with strong, growing economies tend to have more valuable currencies. Second, political stability matters a lot. Investors feel more confident in nations with predictable governments and reliable security. Third, it comes down to simple supply and demand in the global market. If a currency is in high demand, its value goes up. If few people want it, its value drops. Iraq currently faces challenges in all three of these areas, while the Central Bank of Iraq is working hard to stabilize the dinar. The country's economic and political realities make it a slow uphill battle. Understanding these dynamics is the key to seeing why the dinar's value is so much lower than the US dollars. Iraq's heavy reliance on oil also plays a huge role. When global oil prices are high, Iraq brings in more revenue, which can help strengthen the dinar over time. But when oil prices fall, Iraq's economy struggles, keeping the dinar weak. On top of that, ongoing political instability and regional conflicts affect investor confidence. Now, you might see claims online that the dinar is about to skyrocket in value, an event some call the Revaluation or RV. Let's be clear, there is no credible evidence to support these claims. Speculating on the Iraqi dinar is extremely risky. Many people have been misled by promises of sudden wealth, only to suffer significant financial losses. It's also important to understand that exchange rates fluctuate daily. They change constantly due to trading on the global foreign exchange market. Banks, corporations, and traders are buying and selling currencies every second. These activities create the small ups and downs you see in the exchange rate. So the rate you see today is just a snapshot in time. Tomorrow, it could be slightly different. These minor shifts are normal and reflect the complex forces at play. This brings us to the topic of the dinar as an investment. Online communities are full of talk suggesting that currency's value could jump dramatically, making early buyers rich. This is pure speculation. The reality is that currency speculation is incredibly unpredictable and risky. No one can guarantee that the dinar will revalue, and most financial experts consider these promises to be baseless. Buying large amounts of dinar in hopes of a sudden windfall is a gamble that could easily lead to losing your money. Let's get some perspective. The Vietnamese dong and the Indonesian rupiah also trade in large denominations. For example, $1 is equal to over 25,000 Vietnamese dong. This doesn't mean these currencies are worthless. It simply reflects their unique monetary histories. What truly matters is the purchasing power within their local economies. For instance, 25,000 Iraqi dinars can still buy you a decent meal or basic goods in Baghdad. The confusion really only starts when we compare these currencies directly to the dollar without any local context. So what could change the dinar's value in the future? First, economic diversification is critical. Iraq needs to develop industries beyond oil like manufacturing, technology, and agriculture to build a more resilient economy. Second, political stability is a must. Stable government would attract foreign investment and build confidence in Iraq's currency. Finally, improvements in infrastructure, international relations, and trade could all help strengthen the dinar, but this would be a slow and gradual process. Let's address some common myths head-on. Myth 1. The dinar is being held down artificially and will suddenly revalue. The reality is, exchange rates reflect economic conditions and meaningful changes happen gradually. Myth 2. The U.S. government secretly controls the dinar's value. In reality, Iraq's currency is determined by market forces and its own domestic policies. Myth 3. Buying dinar is a guaranteed path to profit. The truth is that currency speculation is highly risky, and many investors lose money. Understanding these facts is your best defense against misinformation. Ultimately, knowing how to read exchange rates is a vital financial skill. Low value doesn't mean a currency is useless, just reflects the economic and historical differences between nations. The Iraqi dinar has real value inside Iraq, even if it seems small when converted to US dollars. By looking at a country's economic stability, political situation, and trade, you can get a clear picture of why a currency is valued the way it is. If you ever hear rumors about guaranteed profits from investing in the dinar, be skeptical. Always do your own research, check information with multiple credible sources, and consider speaking with a qualified financial advisor. Being informed is your best protection against scams and poor financial decisions. In conclusion, the exchange rate of the Iraqi dinar is a straightforward reflection of Iraq's complex economic and political journey. It isn't a scam, nor is it a hidden lottery ticket. It's the result of decades of conflict, sanctions, and ongoing efforts to rebuild. Thank you for joining us today. If you found this information helpful, please like this video and subscribe to Dinar Master Hub for more clear-eyed financial insights. See you next time.